Welcome, your trade of the day, as always, brought to you by Day Trader. Well, check that QR code below. It's going to be AMD. What I like about this, it's a tale of two trades. And sometimes you come in with a bit of a plan of action, and then you have to adapt to what the market's going to give you. So I've got my 15-minute up here. I'm going to highlight the channel because if you're watching the morning show and you're following along the prep, you would have heard me say I favor 72 long in AMD. So I'll just show you on the 15. When we had that big move up last week, and I'm talking this move here off the 72 in a 75, you had this bottom channel the previous day, 71.5. You had the top end of the channel, 72.5. That's where it broke out from early in the session a couple of times, both pre-market, then dip into that range right off 72, and then it started running to the upside. So in yesterday's move, right at the bottom of that channel, well, the top of the channel at 72.5 is where you caught a little bit of a bit. So I know the channel I'm looking for. It's 71.5 to 72.5, and I like that 72 long in the middle. I'll go into that level. Coming out, I'm going to look for that long, be in it in front of that 71.5, hopefully with an average price of 72. But I can't dictate what the market's going to do. So when it does dip by, the first move never enters anywhere close to that price target. It actually gets like 72.80 at the bottom, about 30 cents away from the top of that entry channel. So it doesn't really give me an opportunity to buy it. And then I've got an interesting setup here because you've got a break of the low. You've held well above the support area that I was looking for. And then you're setting up for a break of the top, a momentum breakout to the top side. So I quickly adjust to a different setup. That's going to be the breakout trade where I'm taking that break of the high after a wick bottom and then just looking for a continuation into yesterday's top at 75. So I'm wanting to give it some room with a breakout trade. I'm never giving it forever. I like that pre-market bottom. We're going to give it to that. And if I'm going to hold back about 40 pennies or so, I want to make sure that the structure of the trade is, well, I cannot be getting super aggressively out in front of 74.50. Because if I am, that risk to reward doesn't work. So I take out only a third of the trade when it rejects 74.50 and then need it to break higher. It's got to break above 74.5. Get into that top end of the range at 75, then I can start working the other 2/3 of the position and then take that profit. So the breakout trade comes in, middle of the day, we end up having a massive turnaround on some Apple news and analysts sort of coming out and dropping cold water on Apple again. That caused a huge tank in the market. The stop gets run for the breakout trade, and suddenly we're right back to square one. We're right back to looking at this bottom. And all I ask myself is, okay, well, if it's not going to get into this channel, if it's going to hold that low at the top end, is it going to be able to make a double bottom in front of the top of that range? So that's pretty much exactly what we get. I'm in the long on the way down. You're going to see me stop it out at the low. Don't want to get completely run over because remember, I think if it gets down to 72.50, there's $1 worth of room where I'd want another long. So I'm out of it and only back in when it wick bottoms, reclaims the low. That's these two entries here. Now, first one on the way up, and then I'm actually buying more as it goes higher. This is the thing. When you get a wick bottom like this and the momentum's coming to the upside, sometimes you only want to add on the way in. You can average down all you want, which is getting yourself a better price that's going against you. But sometimes when it starts going and there's momentum behind it, you want to be adding on the way up as it is going. So that's exactly what we did after the wick top. I'm going to scalp some out as it takes out 73, a little bit of size there, take some more out at the quarters, take some more out at 73.30. Now remember, this trade with an average of 72, about 90 for an average, the risk is to the low of the day. So if I'm risking 20 cents, I'm going to want to scalp a bunch of this out and then let it ride through VWAP. Once it got through VWAP, it's kind of obvious where I put my trailing stop. You're going to see me get the trailing stop exactly where we had it before. That's going to be that pre-market low. There was a good turnaround, and as a matter of fact, it turned around nicely, bouncing off of this 73.20 area, and that's where I'm looking to get back in the afternoon, playing that upward trend. But this was a case of having one original plan off a key price area, having it not get to my price, adjust to a breakout trade, and then when that was done, go back to those original levels and find a structure at the bottom that works for a successful scalp trade. Sometimes the market's going to throw you some curveballs out there, But A, I knew the area that I wanted it long. I knew some setups I could play once it was breaking out. And then it's just a matter of following your plan. Always follow your plan. Always check us out every single day. But it is all about day trade the world and having the ability to make multiple executions and trade multiple strategies. Being a day trader, you want to have more than one way to make some money. That's what I love about our platform here. As always, brought to you by Day Trade the World. There's AMD. It's your trade of the day. And it wasn't how I originally thought it was going to be.